All right. Welcome back, everyone. We're diving deep today and going into something a lot of you have been requesting.
Yeah, this is a popular one.
It is building a solid crypto portfolio
Oh.
and how to do it right. Right. So we're going to be talking about diversification in crypto. We actually found a great podcast, the Crypto Insights podcast, I think it's called.
Oh,
Um,
yeah, I listened to that one too.
yeah,
Yeah.
and then they had a whole episode on this, so we'll be kind of pulling from that for this deep dive today. Um, but yeah, I mean, we hear it all the time, don't put all your eggs in one basket and all that. But, what's that actually look like in the crypto world? I mean, the crypto space is notorious for being volatile
hmm
and people want to get in because there is a lot of potential for growth. But how do you, balance that?
Right, yeah. You want to be in it for the long haul, right? You don't just want to make a quick buck and then lose everything.
Yeah, exactly.
Yeah, so like you said, diversification is key here. It's really like, building a strong foundation for anything you want to do. Think of it like constructing a building. You need a diverse range of materials. You need a solid structure if you want it to withstand any, storms that come along.
I like that. That's a good analogy. Yeah. So this podcast, they really stress that it's important to go beyond, just Bitcoin and Ethereum.
Right.
They talk about exploring different sectors. So they had this whole list, DeFi tokens, layer one blockchains, gaming tokens, even stable coins. And I got to say, that's a lot to unpack. Where do we even begin?
Yeah, well, I think it's helpful to, break it down. Imagine like DeFi. Think of that as a decentralized financial system built on the blockchain.
Okay.
So instead of relying on traditional banks, you have these platforms like, OV is a popular one, where you can lend and borrow crypto directly with others. You're cutting out the middleman and you're potentially earning higher returns.
Okay, so it's like a peer-to-peer financial ecosystem.
Exactly, yeah.
Okay, that makes a lot of sense. And what about layer one blockchains? I feel like that sounds pretty technical.
It can be a bit technical, yeah. But I think it is important to grasp the basic idea. Think of layer one blockchains as like the foundation of a house.
Hmm.
So Ethereum, for example, that's a layer one blockchain that hosts a multitude of applications on top of it. So just like a foundation supports, an entire building, investing in a promising layer one blockchain can be like investing in the infrastructure of, the future crypto world.
I see. So it's like betting on the underlying technology itself, not just one specific application.
Right.
Okay. What about those gaming tokens? Are you
Right.
talking about buying like virtual swords and shields here?
Not exactly, no. While some gaming tokens do represent in-game items, a lot of them, what they're used for is for governance. So they give the holders voting rights in the game's development. So, you take Axie Infinity, for example. This is a popular game that allows players to earn crypto through gameplay, but it also lets them participate in the game's future direction by holding these tokens. It's kind of a fascinating intersection of gaming and finance.
That's interesting. Yes, you're not just playing a game, you're potentially investing in its ecosystem.
Exactly.
All right, last one on this list, stable coins.
So
I got to say, aren't those a bit, well, boring compared to these other kind of high-flying sectors?
they might seem less exciting, yeah. But stablecoins are actually crucial for portfolio stability, especially in the volatile world of crypto. Think of them as your safe haven asset, a way to preserve your capital during market dips.
Okay.
So like Tether or USDT, for example, that's pegged to the US dollar, meaning its value should theoretically remain stable even if the price of Bitcoin is, plummeting.
I'm starting to get how these different pieces fit together.
Uh.
So if I'm understanding correctly, diversification is about strategically allocating your investments across these various sectors to minimize your risk and maximize potential gains.
Precisely. It's not just about what you invest in, but also how much you invest in each area.
Right.
That's where the concept of blue chip cryptos and altcoins kind of comes into play.
Right. The podcast mentions balancing those high and low risk assets. So blue chip cryptos, are those like the established companies of the crypto world?
Exactly. Yeah. They've got a large market capitalization, meaning the total value of all their coins in circulation is high. And this typically indicates, stability and wider adoption. So Bitcoin and Ethereum, those are your prime examples. But diversification also means exploring those high growth altcoins,
Right.
which are basically any cryptocurrencies other than Bitcoin.
Okay.
So they offer the potential for significant returns, but often come with higher risk.
Right. It's that classic risk-reward balance. Now, beyond spreading investments across these different sectors and types of assets, the podcast also, they really stress risk management.
Oh.
What are some of those must-know tactics that they mention?
So they highlight three key strategies. First, setting stop loss orders.
Okay.
So imagine setting a safety net for your investments. If a coin's price drops to a certain level that you set, your exchange will automatically sell it. This prevents further losses.
That's a smart way to limit potential damage, yeah. What about the second tactic?
The second one they talk about is rebalancing.
Okay.
As the market fluctuates, the initial percentages you allocated to different coins, those can shift, right?
Right.
So rebalancing involves periodically buying or selling assets to bring your portfolio back to your desired allocation. For example, if your Bitcoin holdings grow significantly, you might sell some to reinvest in other areas and maintain that balance.
Got it. So it's about staying disciplined and sticking to your plan even when the market is going wild. What's the third risk management strategy?
The third one, and I think this is really important, is staying informed. The crypto landscape is changing rapidly. New projects are emerging all the time, regulations are evolving, market trends shift. It's crucial to stay on top of it. Regularly checking reliable news sources, reputable analysts, project websites, all that.
Yeah, that's such a valuable point. So to wrap this up, and we've covered a lot here, you've given us a really solid framework, I think, for building a diversified crypto portfolio. Invest across those different sectors, balance those blue chip cryptos with some high growth altcoins, maybe sprinkle in some stable coins for stability, and always manage your risk.
Absolutely. And remember, the crypto world is constantly evolving, so stay curious, keep learning, and most importantly, enjoy the journey.
Yeah,
Have fun with it.
and think long term.
Yes, definitely long term.
All right, that's it for today's deep dive. Thanks for listening, and we'll see you next time.
Oh, and, we didn't touch on this in this specific podcast that we listened to, but, thinking about diversification, also think about the ethics of where you're putting your money.
Yeah, that's a great point.
Look into, how these cryptos are being mined,
Yeah,
what their environmental impact is,
Yeah.
and, all of those things are part of diversification as well.
yeah. What are the values of the project?
Yeah.
What are they trying to achieve?
Exactly. So keep that in mind. All right, everyone. Take care.